Hello, good evening, and welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Welcome to the second session of Fundamentals of Indian Economy, where in this week we are covering the different concepts which are important for you to understand the subject of Indian economy, and we are discussing that along with certain practice MCQs as well as previous year questions as well. Now, before I start the discussion, please do let me know in the chat section that I'm audible and visible for all of you. Please do let me know. Am I audible and visible for all of you? Done. Let's start. So, once the session is over, those who want to download the PPT as well as the notes of this particular session, you can join my Telegram channel. The PPTs, PDF, as well as the handout notes will be uploaded here. And I know a lot of you are going to write the exams in the year 2026 and 2027. And those who have started preparing now, you'll have lot of queries, you'll have lot of doubts, confusion regarding what should be your strategy. You do not know how to read, let's say, the current affairs. You do not know how to prepare the notes. You don't know what books to read, what kind of strategy you should be following. Now, to address all of your doubts, we have organized an Academy UPSC Summit. This summit will be held on 5th and 6th of July. Various experts, educators will be conducting free sessions. Please do join these sessions and get your doubts or the queries resolved during this particular session. So, all you need to do is register for this particular session using the link provided in the description below. Now, let me start the discussion. First concept I want to discuss today is the idea of economic cycles. Now, what is the meaning of the term economic cycle? Although I'm using the term economic cycle, some of the books or newspapers or magazines, etc., would also be using the term business cycle. Now, what is the meaning of it? Let me start with a very basic concept here. Listen to me carefully. Yesterday, we discussed the concept of GDP, correct? Gross domestic product. What is gross domestic product? It is the market price of all the final goods and services. All the final goods and services which are produced in a particular territory. That is called as gross domestic product. Now, please listen to me carefully. There are two numbers you generally come across in the newspapers in the context of GDP. One, they will simply mention India is the fourth largest economy in the world. Second, India is the fastest growing economy in the world. Is my statement clear to all of you? I'll explain the meaning of both of the statement, but I'm pretty sure when you're reading newspapers or you're hearing too, let's say a speech of prime minister, finance minister, etc., they'll keep on using these statements. In one statement, they'll say India is the fastest growing economy in the world. And second statement they will use is India is the fourth largest economy. Now, what is essentially the difference between both of them? Whenever they use the term India is the fastest growing, they're simply referring to GDP growth rate. They're simply referring to the GDP growth rate. And when they talk about India being the fourth largest economy, they're simply talking about what is the value of GDP. What is the value of GDP? That is, let's say, $3.7 trillion or $4 trillion, $3.8 trillion, etc. That is the size of GDP. But what do you mean by growth rate of GDP? Growth rate simply refers to, compared to, let's say, last year, by how much percentage the GDP number has changed. I'll repeat the statement. Compared to last year, by how much percentage the GDP number has changed. That is called as a growth rate or GDP growth. For example, let's say last year the GDP value was 100 crore rupees, and this year the GDP value becomes 120 crore rupees. Simple CSAT calculation. Can I make a conclusion and say the GDP has grown by 20% here? GDP has grown by 20%. So please be very careful. One is GDP and the second one is GDP growth rate. Now, what is the importance of this? The importance is very simple. There is a concept called as economic cycle. And the economic cycle is represented in the form of a sine wave. It is represented in a form of a sine wave. And what is the meaning of this particular representation? Whenever you talk about economies, the movement in the economy, that is the GDP movement, is not always going to keep on having a upward growth. That is the GDP, if I plot it, let's say in this way, along the y-axis, I'm plotting, right, let's say the GDP, and along x-axis, I'll plot, let's say, time period. What you expect is the GDP to keep on increasing constantly like this. It never happens because there are various external factors as well as internal factors that will have an impact on GDP. And that is the precise reason every now and then, periodically, there will be a volatility in terms of GDP. And that is the basic concept of the economic cycle or business cycle. And what are the phases? If you look at the sine wave, what are the phases? What are the different variations in the business cycle? First, you will experience a boom phase. Either they will use the term boom or expansion. Boom or expansion. After you experience boom or expansion, there will be one more phase, slowdown phase. After slowdown, there is right a recession. If recession becomes a very severe, there will be depression. I'll go one by one. Please listen to me very carefully. And right, let's say one more phase is the recovery phase. One more phase is the recovery phase. So boom or expansion, slowdown, recession, depression, and recovery. What is the meaning of each of the terminologies? Whenever you use the term boom or expansion, it simply means GDP is growing very fast. The gross domestic product is expanding very fast. Lot of investment is happening in the economy. Lot of job generation is also taking place. People, that is the households, are earning lot of income. GDP growth rate is also moving very fast. That particular phase is called as boom or expansion phase. Is everybody okay with the first phase? Do let me know in the chat section. This is the first phase. Now, following this, there will be a second phase that is called as a slowdown. Now, please listen to me very carefully. What do you mean by slowdown? During slowdown, the GDP will continue to increase. GDP increases, but the growth rate will keep on falling down. The growth rate will keep on falling downwards. Right? What do you mean by growth rate will keep on falling down, whereas GDP keeps on increasing? Let me give you one example. Imagine GDP changes from 100 crore to 120 crore rupees. And next year, the GDP increases to 125 crore rupees. And next year, GDP increases to 127 crore rupees. A very simple question to all of you. In this example, is the GDP increasing? Do let me know. Is the GDP increasing from, let's say, year 1 to year 2, now to year 3, and then to the fourth year? The GDP increasing? Yes, GDP is increasing. But if you calculate what is the growth rate, you will experience the growth rate is actually falling down. Growth rate is actually decreasing. In the first year to the second year, GDP growth rate will be 20%. Second to the third, GDP growth rate will be around 4%. And third year to the fourth, GDP growth rate will be in the range of around 1.5%. So please have a look at this. In this particular phase, there is a GDP expansion. GDP is increasing, but the growth rate is actually decreasing. This is called as slowdown. Is everybody okay with the term slowdown? Because a lot of the students or the aspirants get confused between slowdown and recession. What is recession? Recession technically is defined this way. In a technical sense, recession simply means when in two consecutive quarters, when in two consecutive quarters, you will experience a negative GDP growth rate. In two consecutive quarters, you will experience a negative GDP growth rate. Right? What do you mean by this? If you remember yesterday, I told you there is a concept of financial year. There is this idea of a financial year. What do you mean by financial year? It will start from the 1st of April and will continue till 31st of March. The 1st of April of this year and the 31st March of next year. Right? So that is essentially the financial year. And I said the financial year will be divided into quarters. The financial year will be divided into quarters. That is group of 3 consecutive months together. April, May, June is the quarter 1. July, which has started today, July, August, September is the second quarter. So I hope you understand it is divided into quarters. Now let's say in the first quarter, GDP growth rate is negative. Negative means what? GDP has not increased, rather it has decreased. Second quarter, again the GDP growth rate is negative. Now, please understand this. When in two consecutive quarters, when the GDP growth rate is negative, this is called as recession. Is everybody okay with this idea? Please do let me know. In two consecutive quarters, if the GDP growth rate is negative, what do you mean by GDP growth rate is negative? If the GDP from 100 crores will fall down to 90 crores, can I simply say here the GDP growth rate is negative? There is no increase in the GDP number, rather the GDP number has decreased. This is a contraction or this is a negative growth. So in two consecutive quarters, if there is a negative growth in the GDP number, that is called as recession. Now if the recession is not controlled, if you cannot control recession, recession happens continuously for 3 years. If the recession happens for 3 years, intense recession, or for that matter, let's say in 1 year, the GDP growth rate or GDP experiences minus a 10% growth rate, a contraction of 10% or more, that is called as a depression. That situation is referred to as depression. So recession, if you can't control it, recession will continue. Recession will become more severe and that is called as depression. And finally, after all of this, through the government policies, through the investments from the private sector, or because of the Reserve Bank of India policies or the central bank's policies, etc., there will be economic activity promoted. Jobs again will be created. Investments again will be done. And that situation is called as recovery. That is referred to as recovery. Is everybody okay with all these 5 stages? Please do let me know in the chat section. I'll quickly revise now. Quickly, in 30 seconds. Boom or expansion. High investment, high employment, GDP growth rate will be very fast. Slow down. GDP is growing, but the growth rate is falling down. Recession. For 2 consecutive quarters, negative GDP growth rate. Depression. If recession continues, becomes more severe, continues for 3 years, or the contraction in 1 year is more than 10% in GDP, that is called as a depression. And after that, recovery. Right after that, there will be recovery in the economy. So this particular situation is called as economic cycle or business cycle. Now, based on this, I've given a question here. Let's solve it. I want answer from all of you. Please participate. Solving MCQs is the only way through which you will learn, understand all of these particular concepts. Consider the following statements. During the boom or expansion, the economy generally experiences higher employment and investment. Experiences higher employment and investment. Statement A is correct. Correct? Statement A is correct. In fact, right, listen to me carefully. There is a term called as a full employment. There is something called as full employment. A lot of you will be confused with these kind of terminologies. Full employment. If I ask you what do you mean by full employment, most of you, again, because you have not read, your mind will simply say that full employment simply means everybody is getting job. Your mind will simply say everyone is getting job. That is called as full employment. No, that is not full employment. Please remember this. Full employment simply means all those who are willing to work are getting jobs. Is my statement clear to all of you? All those who are willing to work will get employment, will get jobs. That is called as full employment. Willing to work means what? Whatever wages are there in the market, whatever wages are being paid in the market, everybody is willing to get that wages and work. That is a situation called as full employment. Now you tell me, if UPSC will twist the statement and say during boom phase or expansion phase, there is a likelihood of full employment. Is the statement correct? I'll repeat the statement. I'm asking all of you now. Let me know. The statement simply reads during boom or expansion stage, the economy is going to experience likelihood of full employment. Is the statement true or false? The statement is correct, by the way. Most of us saying incorrect. My dear, statement is correct. Why? What happens during expansion or boom phase? Let me know. Lot of you are saying false, but you tell me, what do you think will happen during boom or expansion stage? Investments will be very high, correct? Investments in what? Any kind of projects, right? It could be manufacturing, it could be in the services sector, it could be in research and development. Yes. So investments will be very high. GDP is growing very fast. Employment is also increasing. So don't you think there is a likelihood that full employment being achieved? Likelihood of full employment being achieved, right, during the boom phase or expansion phase. Is the concept clear to all of you? Please do let me know. UPC can test you in this way. Please let me know. Okay. Second, during the slowdown, the GDP contracts. During slowdown, the GDP contracts. No, GDP expands. GDP keeps on increasing, but the growth rate will keep on falling down. Right? Statement B is incorrect. A lot of you are saying yes for this second statement. My dear, please listen to me very carefully. When the GDP contracts for one quarter, it is considered to be recession. No. If the GDP contracts for two consecutive quarters, please remember this statement correctly. If the GDP contracts for two consecutive quarters, only then it is called as recession, not just for one quarter. Okay, so only first statement is correct. Right option is option A. Only one is correct. Everybody is okay? And those who are having doubts regarding the concepts, hold on to your doubts. At the end of the session, I'll address your doubts. I promise you, I'll address your doubts, but at the end of the session. Now, before I take up inflation, there is one more concept I want you to understand because I've received a lot of mails regarding this concept. Stock versus flow. The concept of stock versus concept of flow. For example, let's say UPSC will ask you, GDP, is it a concept of a stock or concept of a flow? Right? If this kind of question is asked, a lot of you will be confused. Let me explain what is a stock and what is a flow. Please listen to me very carefully. Okay, now let's start. All of you, let me explain that with a very simple example. All of you have a bottle on your table, water bottle. Correct. There is a water bottle on your table. Now let's say the size of the water bottle is 1 liter. Okay, the size of the water bottle is 1 liter. Now if I ask you how much water is there in that particular bottle, I hope you understand this example. I am asking you how much water is there in that particular water bottle. You will simply say, sir, right now it is having, let's say, half a liter water, 500 ml or half a liter. That is one question. Second question is, I will ask you, using that particular bottle today, how much water have you taken? How much water did you drink using this particular bottle? You will simply say, sir, throughout the day, because I keep on monitoring how much water I drink throughout the day using this bottle, you will simply say, sir, I have taken so far 3.5 liter of water. Is the two questions okay with all of you? Please do let me know. First question was, right now, how much water is there in the bottle? Second question was, using the bottle throughout the day, how much water did you basically drink? Now listen to me carefully. One is the concept of a stock, and the other one is the concept of a flow. Now, what do you mean by stock and a flow here? Stock means whenever you measure at a specific period of time, any indicator. I'll give you examples. You just give me some time. Any indicator, whenever you measure at a specific period of a time, at a specific time, that is called as a stock. Sir, give me examples. Lot of will say, give me example. Let's start. All of you have wallets. All of you have wallets, right? Purse. Can you count how much money is there in wallet? And don't you think when you count this money, it is being counted at a specific time? That is right now, 8/20/8/22. How much money is there in your wallet? That is at a specific time. Can I simply say it is a stock? Now somebody will say, but sir, give me examples in economics, not in my wallet. Give me example associated with economics. Let's say companies such as Reliance. Can the company Reliance right now tell you how much money is there in their bank account? Again, I don't go and ask, but right now, can they find out how much money is there in their bank account? Yes. How much goods have been manufactured and kept in their warehouse? Can they give you that info? How much inventory, that is raw material, right now is there with the company? Can you count that information? Can you provide that information? Now tell me, whenever you find out this kind of information, that is how much money is there in the bank account, how much final goods are there with the company, how much raw material is there with the company right now, can I simply say it is nothing but a concept of a stock? I want an answer from all of you. Can I simply say it is nothing but a concept of a stock? That is at a specific time, you are counting the numbers. You are finding the indicators. That is a stock. But on the other side, there is also a concept of a flow. Right? I'll give you best example of a flow. You tell me what is the meaning of GDP? Right? How do you measure GDP? In the last 1 year, I repeat, in the last one financial year, what is the market price of all the final goods and services? All the final goods and services. Now tell me, are you counting the market prices at a specific time or for the full year? Over a period of time. Flow means over a period of time. Any indicator which is measured over a period of time is called as a flow. Is everybody clear? Please do let me know. Whenever you measure something over a period of time, that is called as a flow concept. GDP, you're counting the market price of all the goods and services for 1 year over a period of time. Exports and imports. Exports and imports. How much exports have been done in the last 1 year from India to rest of the world? How much exports have been done in the last one quarter from India to rest of the world? How much imports we have done from rest of the world to India in the last 1 month? In the last, right, let's say 1 year. In last quarter. Can I simply say this is again the concept of a flow here? Is everybody okay with the concept of a stock and a flow? Do let me know. Questions have been asked, can be asked again. They can test you in this. Everybody is okay with the concept of a stock and a flow. Again, think of this way. Stock means right now. At a specific time period, you are measuring stock. Flow means over a period of time. right, over a period of time. That is the concept of a flow. Okay, so GDP, export, imports, etc. These are measured over a period of time. Whereas, right, let's say inventories, the bank balance, right, these are measured at a specific time period or at a specific time. That is nothing but a stock. Okay, now associated with a straightforward MCQ. Please solve this question. Straightforward. Which of the following are examples of stock concept? Stock concept. Bank balance, gross domestic product, exports or imports, or exports and imports. So GDP is a flow concept, export or imports is a flow concept, bank balance is a stock concept right now or at a specific time. Right option is option A, only one of them is correct. Everybody is okay, right? This is how you need to understand the basics, be aware of it. Questions will be asked in the preliminary examination. Now, next concept I want to cover, important one, concept of inflation. Right? What is the concept of inflation? What is the meaning of it? What is the importance of it? Have there been any questions in the past? We will do all of that one by one. Point number one, inflation simply means the price level, the price level of basket of commodities. The price level of basket of commodities is increasing. Price level of basket of commodities is going upwards. That is called as inflation. Now, what is the meaning of it? Imagine, right, in a household. Why to imagine? All of you will follow this. In your own life, in your own household, is it okay if I say you will purchase a group of goods and services from the market? Basket means simply this. You will purchase group of goods and services. For example, today itself, you would have purchased a milk. Some of you would have purchased a bread. Some of you would have purchased oil, cooking oil. Some of you would have purchased right petrol or diesel. Some of you would have purchased a mobile phone from the market. Some of you would have purchased vegetables from the market. So I hope you understand. Whenever you come across the term basket, basket means group or collection. Basket means group or a collection. That is the basic idea of a basket of commodities, that is goods or services. Now, what is the meaning of it? Imagine there is a basket of goods and services. Last year, you paid 100 rupees for the basket. You paid 100 rupees and you got the basket. That is group of goods and services you are able to purchase. But this year, to purchase the same basket of goods and services, you will be paying 110 rupees. You will be forced to pay more than 100, that is, let's say, 110 rupees. Now, simple CSAT calculation. Can I, based on this, come to a conclusion? Compared to last year, the price level of the basket of commodities has increased by 10%. Do let me know. I want an answer in the chat section. Compared to last year, for the same basket of goods and services, I am paying 10% more. This 10% more, my dear, is nothing but inflation. It is nothing but inflation. Now, will the economy always experience inflation? Can there be opposite of inflation also? Yes. Instead of 100 rupees, you might end up paying 90 rupees as well. Possible. That possibility is always there. But what is this referred to as? Compared to last year, if you're paying lesser amount of money for the same basket of goods and services, this is called as deflation. This is referred to as deflation. So inflation, increase in the price level. Deflation, decrease in the price level. Opposite of inflation is deflation. Is it okay? That is right. That's point number two. Point number three, sir, why does it happen? If there is inflation, why does it happen? All of you, please listen to me carefully. Whenever you talk about inflation, the inflation can happen because of one, supply side factors. It can happen because of supply side factors, or it can happen because of demand side factors. I'll explain both of them. Please listen carefully. It can happen because of the supply side factors, or it can happen because of the demand side factors. Sir, what do you mean by supply side factors? What do you mean by demand side factors? Now, please understand, whenever you use the term market, I'll connect it to inflation, don't worry. Whenever you use the term market, what does the term market actually mean? What do you understand by the terminology market? Market is a place where seller and buyers meet. Is it okay? The market is a place where sellers and buyers meet, where both of them negotiate with each other. They come to a conclusion. They arrive at a conclusion or an agreement. Conclusion or agreement regarding what? They will arrive at an agreement regarding how much will be bought and sold, at what price the goods will be or the services will be bought and sold. If we are the two parties, if I'm a seller, if you are a buyer, we are coming to an arrangement. I will simply say how much goods I will give to you, at what price I'll give to you, and you will agree to that, purchase those set of goods or services and pay me the amount of money. This is called as a market. Now, whenever the factors on the seller side, listen to me, whenever the factors on the seller side will lead to increase in the market price, that situation is called as cost push inflation. I'll give you examples, just give me a minute. That is referred to as cost push inflation. And whenever there are certain factors on the buyer's side which will lead to increase in the market price of the commodity, that is called as demand pull inflation. Demand pull inflation. Is the concept clear so far? Please do let me know. If the seller sides, right, if on the side of the seller something happens, and as a result of this the market price goes up, that is called as a cost push inflation. And if something happens on the buyer's side, as a result of this the prices will go up, that is called as a demand pull inflation. Now, what are the factors? What will cause a cost push? What will cause a demand pull? Let me give you certain examples. For example, one, let's say a manufacturer will purchase raw materials. What if the price of raw material will go up? All of you, please do let me know. What if the price of raw material will go up? If you are a manufacturer, if you are buying raw material and the price of the raw material goes up, don't you think automatically the cost of production will go up? And when the cost of production goes up, what do you think will happen to market prices? You will have to increase market prices. Otherwise, your profits will go down. I hope you understand this. Some of you will simply say, sir, if the raw material cost goes up, I will not increase market price. What will happen? Nothing. Your profits will go down. And who in the market, which seller in the market will accept it? They will not accept it. They will simply increase the market price. Everybody is okay? Second example. What if the wages that you're paying to the workers, the wages that you're paying to your workers will increase it? Don't you think when the wages will increase, automatically the manufacturing cost increases? And when the cost of production increases, market prices will have to increase. I'll give you one more example. Let's say the government's taxation, right? Taxes here, I'm talking about GST, for example. If government of India, instead of imposing 10 rupee GST, will increase the GST to 12 rupee, what do you think will happen to market prices? Market prices automatically will go up. Correct? All of you able to understand? Right? So there are various factors on the supplier side, various factors on the seller's side, which will contribute to increased market price of the goods or services. And that in turn will lead to, right, a type of inflation called as a cost push inflation. Everybody is okay with this idea? Can I shift to the other side now? That is called as a cost push. Now let me ask you one question before I go forward. Let me see how many of you will be able to analyze and tell me the answer. Let's say, I'll ask you this example now. All of you please participate and tell me. Let's say there is a natural disaster. Say there is a natural disaster, right? For example, floods. If there is a natural disaster, what kind of inflation do you think will happen? Whether this will lead to cost push or a demand pull inflation? Let me see how many of you understand this. I'll repeat the statement again. If there is a natural disaster, such as a floods, will it lead to a cost push or a demand pull? A lot of you are saying demand pull, and some of you are saying cost push. And many of you are simply sitting silent. Your argument will be, sir, I'm eating dinner now. How can I type? I will not be able to type, right? So, or some of you will simply say, sir, you only tell the answer. You are going to write the exam, so you only tell the answer. I will not analyze anything. I'm here to simply sit and listen. My dear, in case of natural disasters, it will be cost push. It will be cost push. How I'll explain? Please listen to me very carefully. In the context of natural disaster, let's say such as a floods, what do you think will happen to agriculture production? Do let me know. What do you think will happen to agriculture production? When the floods will happen, do you think agriculture production will increase or decrease? Agriculture production will be decreasing, correct? Output of tomatoes or onion or wheat, right, etc. The agriculture production will decrease. And when agriculture production will decrease, what do you think will happen to supply? Supply automatically changes. Supply automatically changes. And when the supply changes, and as a result of this, market price goes up. Market price has to go up now. Because let's say onion, if too much of onion is lost, supply will go down. When the supply goes down and the demand is not changing, imagine the demand is the same like this, the market prices automatically will start increasing. So it is the buyer side or is it the seller side which is contributing to higher market prices? It is the seller side which is contributing to higher market prices. It has to be cost push inflation. Everybody is okay with the argument here? Can I shift to the demand pull inflation now? Can I shift to demand pull inflation? Now, how can demand pull inflation happen? Right? What kind of factors will cause all of it? Let me explain this. Let's say there is a very high growth in the economy. Very high growth, or the economy experiences expansion stage. Very fast growth, GDP increases very fast. Now tell me, if the GDP is expanding very fast, lot of investment is being done, lot of jobs are getting generated, don't you think at the same point of time, incomes or the wages earned by the households will also start increasing? Correct? Incomes or the wages of the households will also start increasing. People will start earning more and more salaries now. And when this will happen, what do you think will happen to demand for goods and services? The demand for the goods and services will also start increasing very fast. And we will reach a certain situation where the market supply will not be able to match the demand for the goods and services in the market. The demand for the goods and services will be much higher compared to supply in the market. And that will contribute to a higher demand, which is basically going to contribute or cause a demand pull inflation. What is the meaning of a demand pull inflation? Demand is much higher compared to supply. Demand will be much higher compared to supply. And when the demand for the goods and services is very higher compared to supply, the market prices tend to go upwards. Market prices will have to keep on increasing, and that is called as a demand pull inflation. Everybody is okay with the first reasoning here? Let's say another reason I'll tell you. Right? Very simple. Another reason, right? Let's say there is very high supply of money. Increased supply of money, either because of the government policies or because of the central banker, etc. Very high supply of money. Money supply in the economy increases. If government of India will start providing lot of subsidies to you people, will give you money, will basically provide lot of right, let's say fiscal policies or let's say financial policies where the money is transferred into lot of people's accounts. That will automatically trigger the demand for the goods and services. If government of India will spend lot of money, develop infrastructure, hire more and more people, salaries would increase. That will also cause right, let's say higher demand in the market, or for that matter Reserve Bank of India. If the Reserve Bank of India, because the supply chain is very simple here, please have a look at this. RBI will provide loan to a bank. RBI will provide loan to a bank, and a bank will provide loan to a borrower. Borrower such as you and me who will purchase the goods and services in the market. Now, please tell me, if RBI will provide the loan to a bank at lower rate of interest. Now, please do not worry about the technical terms here. Somebody will say, sir, is a rate of interest repo here? Is it reverse repo? Is it the bank rate, etc.? Please don't worry about all of it today. There is one more session when I'm going to discuss all the monetary policy tools. Join the session. We will have a detailed discussion there. But concept is simple here. If RBI will provide loans at a lesser rate of interest to a bank, obviously the bank in turn will provide loans to borrowers at lesser rate of interest. If the rate of interest is lower, what do you think the borrowers will do? Borrowers such as you and me will take lot of loans from the bank. And when we take loans, we are not going to sit quiet. We will go to the market and start purchasing goods and services. We'll start purchasing lot of goods and services. As a result of this, can I simply say there might be a situation where the demand for the goods and services might become more compared to supply, and this will contribute to inflation in the market. But more importantly, now you people answer to me. You people answer to me now. Can I simply say, with higher money supply, with very fast growth in the economy, etc., it is the buyer's side which is going to contribute to increased market prices of the goods and services in the market. Correct? All of you able to understand? I'll repeat the statement again. And I want an answer in affirmative or negative from your side. Whether it is higher money supply from Reserve Bank of India or because of the RBI policies, or very fast growth contributing to high employment generation, etc., it is going to contribute to inflation because the demand is going to increase from the buyer's side. And that is the precise reason this is called as demand pull inflation. So one is a cost push, second one is the demand pull. UPSC has the tendency of testing you in these two concepts. Be very careful. Whatever the question is, please look at the question, look at the factors. Is it the supply side factor? Is it the demand side factor? Right? Is it a supply side factor or a demand side factor? Based on that, you take a call. Let me ask you one question here. And before I go to the MCQ and solve it, let me ask you one question. If the government of India increases the income taxes on individuals, I repeat, if the government of India increases the income taxes on the individuals, will it help the government to control demand pull inflation or cost push inflation? Do let me know. I'll repeat the statement again. If the government of India will increase the income taxes on individuals, will it help the government to control the demand pull inflation or a cost push inflation? What will be your answer? Will it help in cost push or demand pull inflation? My dear, it will help in controlling demand pull inflation. It will help in controlling demand pull. How? Let me explain this. Some of you are saying cost push. What is the argument behind this? Imagine my income is 100 rupees. Again, just an example. Imagine my income is 100 rupees, and let's say I will not save any amount here. I will use all the 100 rupees to purchase goods and services in the market. Now, out of this 100 rupee, instead of collecting 10 rupee income tax, what if the government will collect, let's say, 25 rupee income taxes? Think of it. Instead of collecting 10 rupee, If the government will start collecting 25 rupee income taxes, can I simply say now, instead of spending 90 rupees, I will be having only 75 rupees for purchasing goods and services. And because the amount of money that I will have now to purchase goods and services will go down, the demand for the goods and services will also start going downwards. And when the demand for the goods and services will go down, it will help in controlling the demand pull inflation. Is everybody okay with this? Please do let me know. Is everybody okay with the argument here? Please be careful. Have conceptual clarity. Always focus on the concepts. Do not mug up. Do not by heart. Do not memorize everything. Concept should be clear. Those who are having doubts, have patience. I'll take up your doubts at the end of the session. Okay. Now let's solve an MCQ. This is not PYQ. I'll take up the PYQ after the concepts are over. Question: which of the following may contribute to the demand pull inflation? Please solve it before I solve it and tell me the answer in the chat section. Higher GST, higher crude prices, lower interest rate, and lower income tax. Lower interest rate and lower income tax. Higher GST, don't you think it is a supply side factor? It will increase the market price, no doubt. It will increase the market price, but it is a supply side factor, will contribute to cost push. Higher crude prices. If the crude oil prices will increase, the transportation cost will increase. When the transportation cost will increase, market prices will increase. But again, it is a supply side. It is a supply side. But the question is demand pull. Some of you are saying A, Sangram, my dear. Right? Please be very, very careful. Lower interest rates. I've explained this. If the interest rates are lower, the loans taken will be much higher. If the loans taken are right much higher, automatically right the demand for the goods and services will start increasing, will contribute to demand pull. Yes, lower income tax rate. If the government will reduce the income taxes, I will have more amount of money now. And when I have more amount of money, I will be spending more, demanding more, will contribute to demand pulling. Everybody is okay with this, right? So 3 and 4 are correct. Right option for the question will be option C, 3 and 4. Everybody is okay? Now, let me go to the next concept within inflation. How do we measure inflation? We have understood what is inflation. We have understood what is inflation. We have understood, right? I hope you understand. We have understood how inflation is caused. Now the question arises, how do we measure it? And how do we find out what is the rate of inflation? For example, every month, generally in the newspapers dated 13th and 14th, observe it. 13th and 14th of every month in the newspaper, there will be newspaper reports providing you the data regarding what is the inflation rate. Right? What is the inflation rate? But how do we measure it? Listen to me carefully. There are essentially two types of measures. One is called as WPI, Wholesale Price Index, and the second one is called as CPI, Consumer Price Index. I'll repeat the full form again. One is a WPI, Wholesale Price Index. Second one is CPI, Consumer Price Index. Now, what is the difference between both of them? The Wholesale Price Index essentially measures the inflation rate in the wholesale market. All of you heard of the term wholesale market? Please do let me know in the chat section. What is the change in the price level in the wholesale market? Wholesale market means what? Where the quantities of goods bought and sold are very large. Quantity is very, very large. And generally it is from one company to another company, from one company to a trader, etc. That is the wholesale market. So what is the change in the price levels in the wholesale market that is measured called as a WPI? Second, CPI. What is the change in the market prices of basket of goods and services in the retail market? In the retail market. What do you mean by retail market? Where individuals such as you and me will purchase the goods and services. Everybody okay with the statement here? Where individuals such as you and me will purchase the goods and services. That's the reason this is referred to as a retail market. So first point of difference, wholesale, retail. Second, what is the basket? WPI, in the WPI, what is a basket? In the basket, please remember in WPI, only the goods are considered. Only the goods are considered in the basket. Whereas in case of CPI, the basket considers the goods as well as services. The goods are also there in the basket, the services are also there in the basket. In case of WPI, how many goods are there? How many goods are there? Right now, 697 goods are there. The basket has a 697 goods. Whereas in case of CPI, the goods plus services, I'm talking about overall. That is for whole of India. We have 299 goods plus services. 299 goods plus services. Now listen to me carefully. As expected, some of you are asking, sir, why? Why do we have in the WPI only the goods? Point number one, WPI is a historical measure of inflation in India. Historical means very old measure. Even before the independence, WPI as a concept was introduced in India even before independence. And at that point of time, it was majorly focused on trading of goods. The services today are predominantly bought and sold in the market. Absolutely correct. You are correct. The services contribute more than 50% to GDP. Yes. Should we consider services in the basket of WPI? Absolutely yes. Is the government doing anything in this context? Again, the answer is yes. Remember the name of the committee. Earlier, there was one committee set up by Government of India, Ramesh Chand Committee. Ramesh Chand Committee. Ramesh Chand Committee has recommended that right now WPI only focuses on the goods. Basket has only goods. You should consider services as well. And it might so happen in the next 1 year, before you write the prelims next year, it might be done as well. It might be done. It is on the cards. It is being considered by the government of India. But as of now, the fact of the matter is very simple. Here, only goods are there. Here, the goods plus services both are there. Okay, right. So 697, 299, and one more difference between both of them. That is, the WPI is published by Ministry of Commerce. It is published by Economic Advisor who functions under the Ministry of Commerce. Whereas in case of CPI, it is published by NSO. Now, all of you, please tell me the answer. The NSO functions under which ministry? Please do let me know. NSO functions under which ministry? I've told the answer to this in the yesterday session. I am checking whether you people are reading or not, whether you people are revising or not, whether you have simply downloaded the handout, downloaded the PPT, and you want to become simply the collectors. Collectors of what? You decide. NSO functions under MOSPI, Ministry of Statistics and Program Implementation. So CPI is published by Ministry of Statistics and Program Implementation. Is it okay? And finally, in case of WPI, the base year for WPI right now used is a 2011 and 12, and the base year for CPI right now used is 2012. Right? And please understand, what is the use of base year? Base year is generally used as an, right, let's say a standard. Right? It is essentially a standard. For what purpose? Let me ask you this. What is the use of the base year? Some of you will be having this kind of a doubt. What is the use of a base year? If I ask you a question, let's say A has scored 30 marks and B has scored 50 marks. If I ask you which of the two students has scored better, lot of you will jump and say, sir, it's a very easy question. B has scored 50 marks. But I hope you understand. Did I give you out of how many maximum marks they have scored 30 and 50? Think of it. Did I tell you what is the maximum number of marks? Maximum is important. Why? Comparison. You need to compare, right? That is the reason. What if I say A has scored 30 out of 50, B has scored 50 out of 500? Right? Some of you will say, sir, it looks like my GS paper 1 and GS paper 2 marks. I know some of you will simply say, sir, GS paper 1, GS paper 2. Out of 500, I got, right, let's say 50. Don't worry about that. Just a joke on the sidelines. Don't take it seriously. So I hope you understand. You need to have a standard. You need to have a standard. And that is the reason there is a concept of a base year. Everybody is okay? So base year for CPI is 2012. Somebody said both are same. No, calendar year. There's a difference between writing 2011 and 12. It simply means a financial year. Whenever they write 2 years like this side by side, financial year. This is a calendar year. Both are not one and the same. So everybody is okay with the measurement of both the WPI and the CPI. Do let me know in the chat section. Everybody is okay with the measurement of WPI and CPI. Okay. Now, based on this, let's solve a question. Right, let's solve a question. I'll tell you what is the impact, what can be done to control inflation, etc. That will be the other part of discussion. Let's solve one more question. Consider the following statements regarding WPI and CPI. Slightly difficult. Those who have read, they'll be able to answer. And those who have read, a lot of them will not be able to write an answer to this or find an answer to this question. Why? Slightly technical question. Both have a basket of goods and services. Lot of will simply say, yes, sir, this is straightforward. Incorrect. Incorrect. Both are published by MOSPI, right? Okay. Incorrect. Why? One is published by Ministry of Commerce, Economic Advisor, and the other one is published by, right, let's say, the MOSPI, Ministry of Statistics and Program Implement. Both have a base year of 2011 and 12, right? No, both do not have the same base year. CPI 2012. This is likely to change in the next 1 year. Keep your eyes open. Read the papers correctly. And WPI has a base year of 2011 and 12. Again, likely to change. Likely to change. Okay, so all the three statements are incorrect. Right option for the question will be option D. Now, somebody is saying financial year and calendar year. Listen to me very carefully. Yesterday also I've discussed this. That's the reason I'm saying please join the sessions every day in this week. Again, I'm repeating this. This week, every day, 8 p.m. we will have fundamentals of Indian economy session. Please join. Okay. So what is a financial year? It will start from the 1st of April and will continue till 31st March. 1st April of this year to 31st March of next year. That is a financial year. Anybody knows why? Why the financial year is measured this way? Why do we follow this as a financial year? Anybody knows the answer? Do let me know in the chat section. Another one is a calendar year. Very simple. Calendar year basically starts from the 1st of January, ends on 31st of December. That is a calendar year. For CPI, this is the reference period which is taken as a, right, let's say base year. For, right, WPI, the financial year is taken as a reference or the base year. Okay, some of you are giving you the answer, give me the answer, New Year, Yugadi, etc. Historically, if you see, it is connected to the culture, the kind of culture that we have followed in the past, right? According to the Indian culture, generally this is the time period when, right, let's say the calendar, not the calendar year, the cultural calendar that is supposed to start. This is also the time period when the cultivation, sorry, the sowing, the agriculture cycle starts. And that is the precise reason, even though many countries follow the calendar year as a financial year, in India, we have continued this concept of a financial year. We have continued this concept of a financial year. And everybody's okay. Again, I don't expect UPSC to ask you this question in the preliminary examination, but suddenly this can be raised in the interview. Okay. Now, Let me go forward. What is the impact? What is the impact? Somebody says, how culture? My dear, please check when does the Hindu calendar actually starts. Not the Hindu newspaper, Hindu calendar. There's a concept called as Hindu calendar. Different, right? Let's say the months are counted in a Hindu calendar. Just check when the Hindu calendar starts. That is a connection to culture. Okay, anyways, come back to this. What is the impact of inflation? If inflation is there, what is the impact? Fact is simple. One, listen to me very carefully now. It will have an impact on the purchasing power. It will have a huge impact on purchasing power. What do you mean by purchasing power here? Imagine you have 100 rupees. Right now, the price of the basket is, let's say, 20 rupees. I'm taking simple example. Let's say the basket price is 20 rupees. Can I simply say you will be able to purchase 5 units of the basket? 5 units of the basket. But if the price goes up from 20 rupees to 25 rupees, instead of using the same amount of money to purchase 5 units, now you can purchase only 4 units. You can purchase now only 4 units. So purchasing power will be affected. That is the first impact. Second one, it will also have an impact on investments. Remember this. We will connect this to current affairs also. It will also have a huge impact on investment. How? Imagine you have 100 rupees. All of you, please listen to me very carefully now. Imagine you have 100 rupees. You will take the 100 rupees. There are two options. You can take the 100 rupees, go to the market, purchase a group, that is the basket of goods and services. Price of the basket is how much? 100. Or else, there is one more option. You can take the 100 rupees, go to the bank, deposit 100 rupees. Right now, you do not want to purchase the basket of goods and services. So, you will take the money, deposit that money in the bank. Bank manager simply comes to you and say, sir, I will give you 4% rate of interest. You keep the 100 rupee, I will give you 4% rate of interest. You'll be very happy. Your parents will be proud of you. Your parents, in fact, will keep on pushing you to keep more and more money in the bank. Right? Your parents will keep on telling you, save money, put it in the bank. You will do that. But what if I say after 1 year? Now listen to me carefully. After 1 year, inflation rate is 4%. What does it actually mean? What is the price of the basket today? 100. After 1 year, the price of the basket becomes 104. And after 1 year, the amount of money that you have kept in the bank, which was 100, with the interest of 4%, will also become how much? 104. Now you tell me, in reality, did you earn anything more? That is, if you use this money, go to the market, purchase the goods and services, any savings are left in your hand? Any amount is left in your hand? Absolutely no. Right? So, can I now simply say inflation will eat away your returns? Please do let me know. I'll repeat the statement whether it is clear or not. Inflation will eat away your interest. Right? So, that's the reason. Just think of it. Whenever you keep money in the bank accounts, just think of it. What is the inflation rate in India? 4%. How much is your SB account offering you in terms of interest? 4%. Right? In reality, when you adjust for inflation rate, in reality, you're not earning anything because the inflation is eating away your purchasing power. Whatever 4 rupee you're earning, it is gone because of inflation. Everybody's okay? Now, how it is going to have an impact on investments? After knowing this, you tell me, will you be interested in keeping money in the bank deposits? Let me know. Hungry athlete says at least the money is safe. My dear, no guarantee there also. What if that particular money was kept in the Punjab Maharashtra Cooperative Bank and the latest one, Karnataka Bank? I don't know how many of you are reading the newspaper. Tomorrow it will be there in the newspaper. What if that money is there in Karnataka Bank? What if that money was kept in, right, let's say, Yes Bank, etc. Or worst case, cooperative societies. I hope you understand the context of the point that I'm trying to make here. Again, don't worry about it. So all of you able to understand? What will you do? Rather than keeping money in the bank accounts, you will take the money, invest somewhere. Where? Some of the people will prefer gold. Correct? And that is the reason. I hope you understand now. This is one of the reason why the gold prices in recent times have hit more than 1 lakh rupees per 10 grams. All of you able to understand this? This is the reason why the prices of the gold, one of the reason, not the only reason, one of the reason why the gold prices have crossed more than 1 lakh rupees now. Why people, investors, central banks, everybody is worried about inflation rate, uncertainty. So what they have done? Rather than investing somewhere, they have taken the money, invest in gold, keep on purchasing gold. And when the demand keeps on increasing, the market prices will keep on increasing. Is it okay? Everybody is able to understand. It will have an impact on investments in the market. Investments in the market. It will also have an impact on, right? Let's say your real interest rate. Real interest rate is essentially how much interest you are earning after adjusting for inflation rate. How much is your interest rate after deducting the inflation rate from the actual that is the real interest rate. And it will also have an impact on exports also. Why? You tell me. If I'm a manufacturer, because of inflation, the market price of my product goes up. Don't you think my product's export in the international market would be affected because of it? Yes or no? Does it make sense to you or not? You tell me now. If the market price of my product goes up because of inflation, don't you think exports from India to rest of the world would be affected because of it? Because now the products have become more costlier. The products have become more costlier. Last year it was 100, now it has become 105. Whereas in other countries it is 103. How will I export my goods? My exports would be affected. Right? So these are some of the, right, let's say issues that are created because of inflation rate in the domestic market. Okay. Now, how can we control inflation? What are the ways to control inflation? Simple. If it is a demand pull inflation, the government can increase income tax rates, can cut down its expenditure. Reserve Bank of India can increase interest rates, etc. That can be done. If the, right, let's say the factors which are contributing to inflation is a cost push inflation, that is a supply side. Can government of India allow cheaper imports to come into India? Just think of it. Imagine the inflation is being contributed because of pulses. Inflation is happening because of, let's say, crude oil. Inflation is happening because of, let's say, onion. Can government of India import onion from other countries around the world, supply, right? Increase the supply in the domestic market. In fact, this has been done by government of India in the past. This has been done by the government of India in the past also. Now somebody will say, sir, what if inflation is caused because of the crude oil? Let me see how many of you are reading newspapers, by the way. If the inflation is being caused because of the crude oil, is there any way that the government of India can control this inflation? RBI can't do anything here. Can the government do anything in this context? Of course, yes. Sir, how? You will ask me how. Last week, there was one article in the Mint newspaper. There was one article in the Mint newspaper. Right? How? One way to reduce the cost of the crude oil in the market, that is essentially reduce the market prices of petrol and diesel, is by reducing taxes. The taxes which are applicable on petrol and diesel by both central as well as the state government. Can they reduce these, right? Let's say taxes, market prices will go down automatically. I hope you understand, will contribute to reduction in the market prices, reduce the cost push inflation. Megha, my dear, you're saying diversify the sources of crude oil? Yes. But you're assuming, again, nothing wrong with that also. You're assuming other sellers are able to supply at lesser prices to us. Is it okay? Right? You're basically purchasing from other countries where they are able to sell it to us at lesser prices. Yes. Another way of right addressing this kind of a inflation which can be caused because of the crude oil is by using strategic reserves. Strategic reserves. How many of you heard of this? I'm connecting it to current affairs. Slight connection to the current affairs. That is the reason again and again I tell the students keep reading current affairs. Understand current affairs. Lot of the times what information you get in current affairs you can connect it easily to the answer writing. And that is the reason, listen to me carefully. Those who are finding the current affairs difficult of Indian economy, I myself, I'm taking one more initiative. I've launched one more initiative by the name of Economy This Week. Economy This Week. Every week, Thursday, there is a video which is uploaded in the same YouTube channel. Right, the video is there. Please watch it. I'm covering important current affairs from different newspaper articles. Now, coming to the article here, the article basically mentioned in which appeared in the Mint newspaper simply stated that the government already has huge amount of reserves. Reserves means extra. It has purchased the crude when the prices were very less. They have stored it. That is called as a strategic reserve. And the government will simply release this crude whenever the market prices of the crude keep on going upwards, keep on increasing upwards. Right? So now government of India wants to expand the reserve quantity. They want to create more strategic reserves of crude oil. So one way, can I simply say, one way to reduce inflation which is being caused because of the fuels is by increasing the strategic reserves and releasing the strategic reserves whenever the crude oil prices will go. Everybody is okay with this argument? Please do let me know. So that's a reason. Do not be right bookish. Do not simply memorize what is there in the textbook. What if they ask you how can you control the inflation which is caused because of pulses? Books will not give you that answer. How can you control inflation if it is caused because of the crude oil? Books will not give you the answer. Right? And that's the reason be aware of what is happening in the current affairs. Done? Right? So these are certain important points associated with inflation. Now, let's solve certain PYQs. Then I'll address whatever doubts you people have regarding whatever concepts I've discussed today. Let's solve. Let's solve now. Which among the following steps is most likely, underline the term most likely to be taken at the time of economic recession? When there is economic recession, which is most likely step to be undertaken? Cut in the tax rates accompanied by increase in the interest rate. Think of it. If you increase the interest rate during recession, do you think investments will increase or decrease? Think of it. During recession, if you increase interest rates, loans will become more costlier. The borrowers have to pay more rate of interest. Why will the borrowers borrow? Why will they invest? Why will they purchase? And you're doing all of this during recession. And during recession, if the GDP growth rate is a negative, if the GDP is contracting, don't you think your policy should increase the GDP number? Your policy should contribute to more demand in the market. Rather, you are reducing the demand by having this kind of a policy. A, incorrect. Increase in the expenditure on public projects. Now, you tell me, think of this. This is the right answer. Just think of it. I'll come back to this. I'll eliminate the remaining two. Increase the tax rate. If the government will increase the tax rate, you purchase more goods and services or lesser goods and services? Will purchase lesser and lesser goods and services. We have already established that. So C is incorrect. Reduction of expenditure on public projects. Some of you are saying Karthik Venkata. My dear, be very careful. This is incorrect. Pradeep Karthik Venkata, please be very careful. Why? If there is a recession, what should you understand? GDP is contracting. GDP is not increasing. GDP is actually contracting. If the government will increase the income tax rates, you will have lesser money to purchase goods and services. If you have lesser money, you will purchase less. If less demanded, production will be lesser. If production is lesser, GDP will increase or decrease? GDP will further decrease. Same thing will happen in terms of reduction in government expenditure also. Government should invest more. Government should spend more rather than reducing expenditure. Why? If the government will spend more, let's say start constructing more roads, start constructing ports, airports, etc., that will lead to employment generation. If employment generation happens, people will have salaries or wages. They will purchase goods and services. That will lead to production. That will lead to recovery in the economy. Right? So, right option is option B. Everybody is okay? Right option is option B. Next PYQ. In India, which one of the following is responsible for maintaining the price stability by controlling inflation? Right? Which of the following is responsible for controlling inflation in India? Please remember, it is the Reserve Bank of India. Remember this. According to an agreement which has been signed between the government as well as the Reserve Bank of India, it is the RBI through its policies which has to control inflation. Which has to control inflation. That is, the target which has been given by Government of India to RBI is that CPI, inflation, should be maintained at 4%. So it is the duty of Reserve Bank of India. Okay. Next, consider the following statements. First one, the weightage of food in the consumer price index is higher than that in the wholesale price index. Difficult statement. Why? I did not give you the weightages. Please remember this. In case of consumer price index, the food commodities have a weightage of around 39%. Have a weightage of around 39%. Whereas in case of the WPI, the food commodities have a weightage of around 24%. Please remember this. Right? In CPI, food has a weightage of 39. In WPI, food has a weightage of 24%. So statement 1, weightage of food in the CPI is higher than that in the WPI. Yes, it is correct. The WPI does not capture changes in the prices of services, which CPI does. Yes, that is also correct. Right, so WPI does not capture, right, the services in the basket. No services are there, but in CPI, the services are there. The Reserve Bank of India has now adopted WPI as its key measure of inflation and decides the rates. No, I think I've told you a couple of minutes ago. 4%. 4% what? CPI. 4% target is for CPI, not for WPI. WPI is not as used as a target by Reserve Bank of India. It is CPI. So first is correct, second is correct. Right option for the question will be option A, 1 and 2 only. Everybody is okay with this? Next PYQ. A rise in the general price level of prices may be caused because of an increase in the money supply. You tell me, if money supply increases, can there be a rise in the general level of prices? And again, what is the meaning of rise in the general level of prices? Nothing but inflation. Don't simply sit, right, when you read this kind of a statement and say, what is the meaning of it? Inflation is caused because of what? Increased money supply? Yes. Decrease in the aggregate level of output? If the output goes down, can this contribute to inflation? Yes. Right? An increase in the effective demand? Yes. Effective demand means, please understand, how much money is there with the people to purchase goods and services. The demand which is supported by the money that is there with the people, that is called as effective demand. Yes, if the demand increases, effective demand increases, that can cause inflation. All the three are correct. Right option will be option D, 1, 2 and 3. Okay, some of you might be thinking, sir, is there connection to mains questions also? What we are discussing, is it only related to prelims or is it connected to mains as well? Please have a look at the question here. Okay. Define potential GDP and explain its determinants. What are the factors that have been inhibiting India from realizing the potential? Some of you will simply say, sir, how whatever we have discussed is connected to the concept of potential GDP. Listen to me very carefully now. What is the meaning of potential GDP? I'll take a very simple example. Okay. Imagine there is one country where there is only one worker. I'm trying to make it very simple. All of you listen to me very carefully. Imagine there is one country, there is only one worker. Now, if the worker is working for full 9 hours with dedication, with full productivity, we will be able to produce 10 goods. Is the point clear so far? Do let me know. I'm taking very simple example. Imagine one country is there, only one worker is there. If this worker is working for full 9 hours as per the law, we will be able to produce 10 goods. So now, using this example, can I simply say the maximum output that is possible in this country is 10 goods? Please do let me know. The maximum output that is possible in this country is 10 goods. This, my dear, is called as potential GDP. Everybody is okay? Please do let me know. This is called as potential GDP. Let me give you technical definition. Potential GDP simply refers to what is the maximum output possible in an economy where there is full employment. Where there is full employment and this production is sustainable. Not for a short period. No, this production is sustainable. The economy where we have all the people who want to work are getting jobs and this kind of a production is sustainable. That is called as a potential GDP. Everybody is able to understand this? Please do let me know. This is called as potential GDP. Now the actual GDP. Actual means what? The one that we have produced. The actual GDP can be higher than potential GDP, can be lower than potential GDP. The actual GDP can be higher, can be lower. Sir, how it can be higher? I'll take the same example. The worker, according to the law, is supposed to work for 9 hours. What if I ask the worker to do overtime? Let me know now. What if I ask the worker to do overtime? Don't you think instead of producing 10 goods, the actual production would end up being 12 goods? Yes or no? Right? It is right. Basically, a situation where the actual GDP is higher than the potential GDP. But this kind of activity is not sustainable. I hope you understand. This kind of activity is never sustainable. Why? Over a period of time, how much overtime can you get this particular worker to do? You can't have this particular worker to do overtime. Sir, only one example. What if the machines are operated overtime? The machines are supposed to operate. But if you stretch the working hours, machines are operated for extra additional hours. Can we have higher production? Yes. But is it sustainable? That is more important. That's the reason whenever the actual output is more than the potential output, this kind of activity is not sustainable. It is never sustainable. Why? Workers will feel tired. The machines, right, can break down at any point of time. The maintenance and repairs will be very, very high, etc. That is the basic idea. And the other side, I said, the actual production can be lower than the potential GDP also. How so? What if this worker is not skilled? Think of it. This worker is not skilled enough. This worker, out of 9 hours, will keep on spending 2 hours on mobile phone. Will keep on talking to each others. Again, I'm assuming multiple workers are there. They'll keep on talking to each other. Right? They will not be working for full they'll not be working with their full productivity, etc. Such cases, right? Let's say the potential GDP is at 10 units, they will end up producing, let's say, 7 units. So in this case, right, the actual GDP is smaller, lesser compared to potential. But what does it actually mean? Whenever the actual GDP is smaller or lesser compared to potential GDP, it actually means we are not able to utilize the resources effectively. We are not able to utilize the resources effectively. We are wasting lot of resources. There is a scope of higher production in the economy. Done? So this is basically the concept of potential GDP. Everybody is okay? right? So these are the things I wanted to discuss in today's session. I've covered, right, last 1 minute, then I'll take up your question. I've covered the concept of stock and flow. I've covered the concept of the economic cycle, and then I've covered the concept of inflation. We have solved multiple practice questions as well as MCQs. I'm sorry, the PYQs. Now, before I close the session, if you have any kinds of doubts, let me know. Otherwise, I'll close the session for that. Huh? Any doubts? Any confusion from your side? If CPI is used to make policies, then what is the point of having WPI? My dear, if the WPI consistently remains higher, you tell me, is it not an indicator that in the coming days the CPI might also go upwards? Chirag, my dear, do let me know. If if WPI in the wholesale market, if it consistently remains higher, you think in the coming days there could also be a higher CPI? Because what happens in the wholesale market will translate to retail market. That's the argument. WPI is an indicator for us. Even though it is old, even though we have CPI, even though WPI is not used for policy making, we still track a WPI every month. Okay. In WPI and CPI, numbers not able to understand. My dear, basket, group, Anandi, basket, there's a term called as basket or group of commodities. So when the government simply says inflation is 5%, what does it actually mean? For 697 goods, the prices have increased by 5%. That is the meaning of the basket. Okay. Independence. What about the types of inflation? My dear, simple factual information is there. There is a, right, let's say moderate rate of inflation, that is creeping rate of inflation up to 3%. Then there is a walking rate of inflation 3 to 10%. Then there is a, right, a galloping rate of inflation, right, around 50%. Then there is hyperinflation more than 50. It's a simple numbers are there. Okay. Hungry athlete. How can India overcome persistent inflation by stabilizing food and fuel prices, protect consumer purchasing power? My dear, you're only giving the answer, no? How can India overcome persistent inflation? By stabilizing food fuel prices. You have given the answer. Stabilize the supply either by importing or import but with lesser or zero tariffs or duties. Promote production in the domestic market. Diversify crop. Right? These are the things. Fuel prices, I've already told you. You have strategic reserves. You have taxation on that. Reduce it, right? Increase the supply, right? Diversify the sources from other countries from which we can purchase at a cheaper rate. That will help us in reducing the cost and which will help us in controlling inflation. Okay. When someone says India's GDP is 4 trillion, what does it mean? Simply means the market prices of all the goods and services produced in the latest financial year is worth $4 trillion. Okay. What is the weightage for food and food in CPI and WPI? In CPI, 39%. In WPI, 24%. Okay. So natural calamity can increase the demand too. My dear, it might, but most of the times it will have an impact on supply side. That's the reason generally the disasters are counted as a part of cost push inflation or seen to be contributing to cost pushing. Okay. Sir, what is GDP determinant? Not GDP determinant, potential GDP determinant. What are the contributors to potential GDP? Skilled level or skilling level of the labor, investments, right? Labor, hiring or employment, unemployment factors, right? The demand for the goods and services. These are the factors which will contribute to, right? Let's say the potential GDP. Okay. Done then. Okay. So let me stop the discussion here. So today I'll stop the discussion here. Tomorrow I'll take up one more topic. Tomorrow I think I'll be discussing monetary policy, fiscal policy and monetary policy. We'll take two sessions, one session for monetary policy, one session for fiscal policy. So tomorrow again same timing 8 p.m. I'll take up one more topic. We will have a detailed discussion. I'll also throw in certain concepts in between so that you can understand the concepts as well. We'll solve the MCQs as well as the PYQs. So please do not miss out these sessions. Tomorrow, let's meet at the same time, 8 p.m. Before I close the session, if you like this initiative, do not forget to hit the like button. If you have got any kinds of doubts, drop in a right, let's say, drop in a comment in the, let's say, video section. I'll take up the question tomorrow. I'll address that particular question. Okay, and if you're yet to join our YouTube channel, kindly do it right now. Thank you. Have a great day. See you tomorrow at 8 p.m.